You are not crazy. Your tax bill is. And if you are a W-2 earner, the IRS treats you like an all-you-can-tax buffet. But here's the little-known fact no one tells you. Most wealthy employees do not pay taxes the same way you do. Not because they cheat, not because they are lucky, but because they understand the tax code better than the people getting taxed. And today, my lunatic friend, I am giving you their exact playbook. Stay with me until the end. The last strategy is the one high-income earners use to legally keep tens of thousands of dollars. You should not miss that one. Hi, I am Luna, your personal wealth designer for my lunatics. I'm a bit sarcastic, slightly unhinged, financially brilliant, and here to help you make taxes feel less like punishment. Let's get into the part the wealthy secretly love: getting taxed less. Here's why taxes hurt so bad on a W-2. When you earn a salary, the IRS takes money automatically before you even touch it. It is like ordering a meal and the government takes the fries right off your plate before you even sit down. That is because W-2 income is taxed the highest of all income types. W-2 income has zero flexibility and zero deductions, except for what the IRS pre-approves. Translation, you are playing on the hardest difficulty mode. But here is the twist. There are perfectly legal ways to reduce your taxable income, redirect your money, and keep more of your paycheck. The wealthy employees at big tech, major corporations, and high-paying industries already do this. The middle class just never gets the memo. Let's fix that. Strategy 1. Max out the accounts that reduce taxes today. You want legal tax reduction? This is the simplest and most ignored strategy. Most W-2 workers do not use the accounts that reduce their taxable income. Let me give you the math. If you make $100,000 and contribute $23,000 to a 401k in 2025, your taxable income is now $77,000. You instantly avoided income tax on $23,000. If your marginal tax rate is 24%, that is about $5,500 saved just by contributing. Add an HSA, and that is another $4,150 you do not get taxed on. If your employer offers both, you are lowering your taxable income by $27,150. At a 24% tax rate, you just saved over $6,500 in taxes with zero effort. This is the stuff wealthy employees max out every year without blinking. They are not smarter, they are structured. Strategy 2. Switch from taxed income to tax-preferred income. You want a secret? High-earning W-2 workers hate W-2 income too, so they add income types that get taxed less. Here is how they do it without starting a company. 1. Earn long-term capital gains. These are taxed at 0, 15, or 20%, much less than your salary. 2. Earn qualified dividends, taxed the same way as long-term capital gains. 3. Earn interest inside tax shelters like Roth IRAs. That is taxed at 0% forever. This is why wealthy employees buy index funds, dividend ETFs, REITs, and rental properties on the side. They convert part of their income into money that the IRS taxes at a discount. Your paycheck pays your bills, your assets pay your life. Strategy number 3. Use deductions W-2 workers forget they have. Most W-2 earners forget that they actually do have deductions. And I am not talking about random receipts for pens and staplers. I am talking about deductions worth thousands. 1. Student loan interest, up to $2,500. 2. Childcare credits. 3. Electric vehicle credits. 4. Solar panel credits. 5. Clean energy home improvements. 6. Charitable contributions up to 60% of income. Yes, 60. Wealthy W-2 earners do not donate out of kindness only. They donate with spreadsheets. These credits go directly against the tax you owe. You can literally owe less money by using the system correctly. Strategy 4. Use a side business to unlock the powerful deductions employees don't get. This is the most common way wealthy employees reduce taxes legally. They keep their stable W-2 paycheck, but they open a tiny business on the side. It can be dog walking, freelance editing, photography, tutoring, a small Etsy store, a consulting service, selling digital products, a home organizing service. When you do this, even if you make very little, the IRS now sees you as a business, and businesses get deductions that employees do not. Examples are your phone bill, your laptop, your software, your home office, your mileage, your professional courses, your travel for business meetings. There's more. This is how wealthy people reduce their taxable income. They split their income into taxed and business deductible categories. Your W-2 job is what the IRS taxes. Your small business is what the IRS lets you deduct. This is the tax system. Not a hack, not a loophole, just the rules wealthy people follow consistently. Strategy 5. Start a short-term rental with tax advantages. Do not skip this part. This is one of the fastest legal tax reduction tools for high-earning W-2 employees. Short-term rentals like Airbnbs are not treated like passive rentals. They are treated like active businesses, which means that if you operate one correctly, the losses can offset your W-2 income. If you buy a $350,000 property and do a cost segregation study, you can often deduct $80,000 to $120,000 in year one through accelerated depreciation. I know that sounds intense. I am an interior designer and home flipper. I promise this is normal in the real estate world. This is how W-2 engineers, nurses, tech workers, and corporate employees reduce their taxable income dramatically without breaking laws. You just have to do it correctly, participate materially, document everything, talk to a CPA who understands STR tax rules. Strategy 6. The HSA Triple Tax Advantage. The HSA is the only account in America that is tax-free going in, tax-free while growing, tax-free coming out. You can invest the money in index funds and never owe a penny in taxes again. This is why wealthy employees max it out every year. They do not use the HSA for small doctor visits. They let it grow like a retirement account. If you invest $200 a month into your HSA from age 30 to 60, you can end up with over $500,000 tax-free. That is real power. Strategy 7. Your employer is a gold mine if you use it correctly. W-2 jobs are not bad. W-2 taxes are. But your employer benefits are a treasure chest people never open. Look for mega backdoor Roth access, employee stock purchase plans, matching contributions, dependent care FSA, professional education benefits, business travel reimbursement, health reimbursement arrangements. These are thousands of dollars waiting to be claimed. Strategy 8. The one wealthy employees use that most people never learn. Your W-2 taxes can be lowered dramatically if you shift part of your income into tax-advantaged assets for the rest of your life. But here's the biggest trick. Your tax bill in April is based on decisions you made between January and December, not the other way around. If you wait until April to think about taxes, it is already too late. Wealthy people plan before December 31st. Middle-class people panic after April 15th. It is not about money. It is about timing. This is the mindset shift wealthy workers use. Every paycheck is a decision. Every dollar is a vote. Every tax year is a strategy. When you see taxes this way, you stop feeling crushed and start feeling in control. This is the beginner edition. We did not even go into advanced strategies yet, but even these beginner moves can help you reduce thousands off your tax bill legally. Forward this to your work spouse. They've suffered enough. Let them at least retire someday. I am Luna, your personal wealth designer. Remember, wealth is not built overnight, but it can be designed every day. Subscribe and I will see you in the comments.